So while we're waiting for people to join, I will do a quick introduction of QPQ for those who don't know us, and also very short introduction of our speaker today, and then I'll let you do a proper full introduction. I'm sure you will do a much better job, even though we know each other for already for many many years. I look back, I think it's 20 end of 2021 when we met first time in
Right, yes.
Kyiv. Yeah. Well,
Indeed.
anyway, look, it's great to have you all here, guys. Today we have a very interesting topic, and Andrei will share it. But before we start, let me just kind of run through some technicalities of how we're gonna conduct today's webinar to ensure that you all get maximum benefit and value out of it. So we have a Q&A section here where you guys can post questions, and then in the end of Andrei's presentation, we will have a short Q&A session where he will answer questions. Hopefully, we'll try to cover as many as possible. If it will be too many, we'll always kind of share post webinar. We'll share the recording and share the answers to those questions as well. So during the webinar, just don't hesitate. Post the questions not through the chat, but through Q&A button in your navigation panel. So, for those who don't know QPQ, we are an investment advisory, and we support project developers in renewable energy, green energy, and sustainability space from the funding side. So we help, of course, investors to originate good project, and we help developers to secure mostly project finance. We have large network of, as of now, close to 900 qualified investors, large funds and private equity, family offices, infrastructure, pension, sovereign funds. We work with pretty much all IPPs as well, independent power producers. So the network is quite large and well diversified. So we help developers to secure debt. We bring strategic equity partners. We have several other financial solutions in terms of mezzanine, bridge loans. We are now partnering up with a green bond issuing company. So this is something that new that we will be rolling out. And I will be posting in the chat some useful material, including Andrei's presentation, our short presentation, and few useful links where you guys can share your projects with us. If you have projects, please send, you can send it through that link or send it to me directly. I will share my email as well. And I will also post a few other links, which is a referral partnership. So if you're not a developer, but you have access to projects, you can become our referral partner. We'll be happy to share some, we work on success basis, so we earn commissions on successful projects. We'll be happy to share commission with you if you refer projects to us. There will be a few other useful links in terms of deal advisory, but it will all appear in the chat in a few minutes after Andrei starts, and then I will repost it again closer to the end of the webinar for those who join late, so you guys, have if you missed it, you will have access to it. And as I mentioned earlier, we will be recording, and we are recording this webinar, so we will be sharing the recording for those who are registered but couldn't make it today. So that's about it from my side. Just quick introduction of Andrei. He's our dear speaker and dear friend already by now. He was kind of all over the place in Europe, in US, and recently relocated to Middle East. So we have a chance to see each other a bit more frequently. But Andrei has quite a diversified and amazing experience. He currently works as CEO on Hy-View on Energy, leading innovation at the intersection of grid balancing, battery storage, and high-performance data centers. So this is our topic today around data centers. And with over 20 years of global experience across Europe, US, and Middle East, he has delivered major renewable, smart grid, and digital infrastructure projects. He specializes in grid interactive demand-side assets that monetize flexibility and accelerate decarbonization. Previously held leadership roles at Scatec, Green Gas International, and UMG Investments, and hold a degree from London School of Economics. And I think when we met, you were a heading Elementor manager, right? In UK.
Yes. And since we spoke last time, I will explain too that I set up a dedicated company, which
Mhm.
is I'm co-founder in the company which is actually developing what I'm going to talk about,
Perfect.
grid interactive data centers. So
So the,
yeah.
the floor is yours, and I really appreciate you dedicating and finding time in your busy schedule to share your wisdom and knowledge with our audience. As I mentioned, I'll be on the background, so I'll be managing all the incoming questions. Once you're done with the presentation, I need to allow you to share the screen. So this is done. So you can go ahead and share your presentation, and then in the end, once you're done, we'll go through the Q&A, and yeah, hopefully you guys will enjoy it. I'm sure you will enjoy it. Andrei is quite a knowledgeable presenter. So please go ahead, Andrei.
Well, thank you for the warm words. I hope you see my screen right now. So,
Yep, it's
uh,
all properly visible, all good. Yep.
oh, super, super. So I'll just go down to the presentation itself and start from short of introduction of myself. Um, my name is Andrei Garanin, and currently I'm a co-founder of a company called Silicon Foundation. I know that when we spoke with Vlad just a couple of weeks ago, I was part of the company which was like prior to this one, Highland Energy. But right now, focusing, we set up a new company which is dedicated to developing projects which are co-located with data centers and focus to bring solutions to grid flexibility. So, just a few words about myself. I have over 20 years of experience in energy industry. I've been working mostly like in leadership position, but early in my career, I started out in oil and gas and slowly moved on to power generation. So I would say like for closer to 15 years, I was working in power generation side of the equation of energy sector. And I think I've done most of power generation, which is available in the energy mix, except nuclear. I've done gas. I used to work as a country manager for Green Gas International, which was one of the, if not the largest European operator of mostly it's CHP engine power generation from gas, like coal mine gas, biogas, landfill gas. And with that company, I was developing projects in Central Eastern Europe, mostly Poland, Ukraine, Kazakhstan at that time. Then moved on to briefly to coal-fired power generation, which is I was on the sustainable part of things, so I was not really part of the burning up the coal, but mostly focusing on actually mopping up the trace and how to make it more effective and less harmful to the environment in terms of residuals and so on. But after a brief period in there, I really started focusing on renewables, namely solar. I've done myself close to 400 megawatt of solar from development to construction and to operation after COD and operating it for a number of years. And many of my projects and the power plants, which are most all of them are industrial scale, are still operational and performing quite well. Um, and again, just to mention, I have a work experience mostly in Europe, Central Asia, and recent years was working in US since a couple of years ago. Decided to pivot towards the actual consumption and consumption equation of the industry. And just briefly on that. Why I decided to pivot towards the flexibility and how to operate consumers since solar and wind have become mainstream new power generation, and that has really become true since most of you, since I presume that most of the visitors to this webinar are like developers, investors, or operators of renewable power generation. Renewables definitely became one of the leading energy source, and it just makes sense to invest there since LCOE, we all know, like levelized cost of electricity, they provide the lowest, effectively lowest cost of power production. It brings other challenges, but I'll speak about it later. But myself, I decided to see that there are like more developers are chasing too few projects like worldwide. Why is that? Very few interconnections available, and it's a major block. Financing is another one, but a major block is available interconnection in foreseeable future. So it doesn't take you like 10 years to develop projects. You're still looking for something which can be launched quite faster and closer to operations, so the capital can actually work. Having said that, my focus shifted to so what's the real block in the in this environment, and how the grids operate, and that led me actually to join a team with the company, which has mostly been focusing on software development, but it was developing software for managing data centers. Data centers are one of the few examples when you have a single large power consumer, but this power consumer can be controlled. Therefore, by combining smart control of the large industrial scale consumer, you can provide a lot of flexibility to the grid. And we can, it's basically part of my speech today. It's about how we can tackle the grid congestion, how we can tackle the need for more power, and how we can make the grid more efficient. Few words about the recent trends. Probably most of you, when you read tech news, um, that you see that there are news coming up almost like like not daily but weekly about the new investments into AI, about that the companies like OpenAI, Amazon, Elon Musk, of course. They are all making an announcement about massive investments into the compute, into data center, and right now it's definitely this industry is driven by hyperscalers. Most of the largest tech companies they commit massive investments for the next 5 to 10 years to invest into the AI designated data centers, which are most of them are filled by GPUs. And maybe if I have time, maybe on the questions, I will explain how they operate and why it's actually, first of all, why it's so expensive and what challenges it brings. And while on the consumer side, we see this massive increase in demand for AI compute, and I can tell you that having like being in this industry, speaking to the players, I can see that this is just starting, and we'll see how it will shape up in the next 3 to 5 years. The AI development itself, it's tremendous in terms of the some prominent, I would say, some prominent speakers or some prominent people in the industry. They're saying this is compared to introduction of AI, the modern AI version of AI. It's similar to invention of electricity. And to my own opinion, I definitely agree with that. And that means that we are on the verge of some massive and fundamental changes. On the other side of the equation, on the power generation side, we see that there are lots of introduction of new power generation. Renewables are making their way, as I mentioned earlier, into the as a mainstream power generation. It's still not everywhere. It's a major player in the energy mix, but we are definitely getting there because economics is still it's it will make the actual solution that renewables will become the main power source. And the question with the challenges what we're facing on the power generation side of things and on power consumption is actually that it's not a big problem or not a big challenge to build out a new solar or wind plant. The challenge is actually how to deliver power where it's supposed to be, and that's becoming increasingly difficult for both power generation and consumers alike. Let me briefly stop on how actually grid work and why it's so important to have flexibility in place and what actually it would imply for both developers, grid operators, and consumers on each of the like part of it respectively. I'll focus here mostly on and explain how energy markets work. since maybe I'm judging myself a bit earlier, and these days all developers and investors are already sophisticated enough to know exactly how actually all the markets operate. But I can tell you that during my days, when we were developing and building solar and wind, we didn't even really care about what is actually happening behind the let's say behind the scenes with the grid operator, since most countries were introducing favorable rules, laws towards the renewable power generation. You can produce as much as you can. The grid is obliged to take all of this power, and this was like, I would say, like early days or golden days when feed-in tariffs were in place, and in many like European countries. Then we faced a different reality, closer to like I think close to like 2020s already after the COVID, and during the COVID, when many countries have, I would say, outperformed their expectation in terms of how much generation will be added, especially on the solar end. Then they started introducing curtailments. They started introducing some other like difficult rules for producers, and that created some of the issues. So let me briefly stop about that. Talk about how what kind of markets exist. In general, there are markets which are regulated and deregulated. In NCOE, it's a European system. Markets are, in terms of the European rules, harmonization of different like energy markets for different countries. They developed like a model which is actually aiming to the goal of deregulation, meaning like introducing a market mechanism on every level of say price determination and how the like energy markets operate, both on how is actually the energy markets, energy price is set on the day ahead or 2 day ahead and the intraday, and the focus of this webinar is how the actual ancillary markets work, and how they're structured. Ancillary markets, they all of them based are on the system of redundancy, which every TSO, transmission system operator, introduces into the system. Most of the utilities and most of the TSOs are focused on the redundancy and basically stabilizing the grid, in the sense that you need to always produce power as much as being consumed. I mean, it's at any given moment it has to be equal. Therefore, there are some redundancies which are put in place, and market mechanisms which allow them to be efficient. I'll start from the frequency curtailment reserve, which is the first. I'll say it's called primary reserve. That's it's measured actually quite simple. In Europe, it's 50 hertz. In US, it's 60 hertz, and some other markets there are some mix, like Japan. But this criteria, it's actually it's indication of how much power, of how much, or let's say how much is demand is right now at any given moment in the system. If you have like increase of electricity, meaning, oh sorry, increase of the frequency rising means that there is like excess capacity power production. If it's a falling, then there is a lack of power generation. The demand is increasing, and there are mechanisms how to react to that, and how to actually compensate for that. So that it's either you need to have fast acting power generation, but in seconds you're quite limited to very few flexible solutions, and one of them is actually battery which can react in milliseconds to any deviation or to signal from TSO. And that's a primary use of and actually the advantage of batteries in that. There are some other like mechanism when you can curtail some consumer in extreme fast manner. Then there is a secondary reserve, which is called AFRR. and traditionally MFR. This were these mechanisms which operate as like automatic reserve in case of AFRR when there is like a picker plant can extremely fast within seconds, within 30 seconds to 5 minutes. And there is a, let's say, a manual MFR which is kicks in within already minutes, like within like 10 minutes or 12 minutes. It's effectively it's starting up a new power block or whatever it would be like. Usually it's a thermal block which can start producing generation during a certain period of time. And why I'm explaining a little bit more this in detail is that as I was speaking, that as renewables are making their way into major player in the energy mix of any country, and effectively they can be deployed anywhere except like a bit too far north or too far south, and of course then the weather conditions. But uh, they have a major, let's say, like a major drawback or major challenge is intermittency. Solar and wind are some major technologies for renewables. They produce quite a lot of unstable or intermittent power production, which needs to be compensated on every at any given moment to provide continuous power generation and power in the grid. And actually, speaking about that, sometimes I was as a speaker, I was talking about that. How far are we from cascaded blackout? And just asking like different audience, obviously, thinking is it like minutes, hours, and so on. But in fact, we are just seconds away. And if there is no capable power generation which can support, if there is a huge increase in the ramp up in power consumption, then we are in danger of actually losing the grid and having cascaded. Speaking about that, what is actually I would like to focus maybe more on flexibility gap. Um, as renewables make their way into the into energy mix, we see it in, may say, maybe on examples of the largest deregulated markets in the world. Mainly, I would focus on PGM and ERCOT, which is respectively PGM. It's northeast of North America, of United States, and ERCOT it's Texas. It's sometimes they call it the most deregulated market in the world, which is effectively it's completely free and has its very interesting features by itself. And this is where apparently where the deployment of major data centers of all hyperscalers is happening. If you look at the center of center of data centers, or sorry for the wording, it's actually Virginia, which is part of PJM. And Texas alone has seen a tremendous growth of data center of various kinds of the recent years, mainly due to its competitive energy prices and quite, I would say, like a variable and um, acceptable energy mix because even data centers as consumers they're still conscious about sustainability end of things and nobody wants to like burn too much coal or fuel fossil fuels to run the systems and that's this actually as well it's another driving force behind why introduction of renewables and that the let's see, I just move. Yeah, move first. I would like to. I just added this slide just before this webinar. As I saw the news article this morning that OpenAI has urged U.S. government to add 100 gigawatt annually of new generation capacity. This has been out just in October, just recently. They simply stating the fact which I was just mentioned that the tremendous growth of demand for AI data centers is leading to it's projecting massive demand for power in the years to come. Um, And there is a comparison. It's just about the strategic advantage of countries between there is obviously there is a global geopolitical competition, and that there is a just a simple comparison. China added 429 gigawatts of capacity just last year, while US added only 51 gigawatt. And we can talk or skip this talk about the recent change of policy in the United States. So like away from renewables. They removed some of the supporting mechanism towards that, but I still believe that the market mechanism will drive forward development of this industry. And uh, now probably I will switch to batteries, and then I'll see how they come into play here. So on one hand, we see the massive growth and projected growth for data center consumption, and they will consume as like one data center usually right now it's standard size is about 100 megawatt, and there are bigger players which are developing gigawatt scale. So what is happening in terms of the flexibility and what is actually projected, what we expect to happen the uh, next years to come, 5 to 10 years. What is happening on the best side of things? Again, I would argue that the best market to watch out for it's United States. First of all, they are leading in terms of data center development. Second, they have um, quite advanced. I would say this is the large market for like English speaking, and it's accessible to a variety of developers worldwide, and most of the mechanisms are market based. So it actually ticks most of the boxes for developers, investors to come into. There are challenges, but on the other hand, there is scalability, and I don't see any other market where you can reach such scale in terms of development and growth on the energy side. So speaking about BESS has been driven largely by the fact that there is a need indeed for the fast responding energy production. And while the old model, I would say the old model is that if a lot of developers think about the uh, best technology is more about okay, and when I build my solar power plant, I'll put next to it some batteries so I can have, let's say, a little bit more flexibility. I will store some energy which I'll generate during the day, but then I will use it during like when there is like a peak hour, and we'll just produce it. While um, the actual value, and that I'm talking about from the real, I've seen real studies actually work in this industry in terms of how much each megawatt of flexible capacity can bring rather than just on doing the arbitrage, just buying at a low price and selling at the during peak hours at a high price. That's not really efficient model to operate such a system. The systems are falling in price, and I didn't include. It's not a webinar just about the best, but that we see the trend was happening with batteries is that the prices are the cost of production is falling rapidly. I think I would say that it's something what is happening to what has been happening to solar industry over the last decade when it was the is still gradually the cost of production of solar panels and solar technology is actually it's dropping. Batteries are currently going through the same or similar, I would say, similar trend. At the same time, there is a huge demand for it because the markets demand flexibility, and I can support this by just look at the PGM data. PGM capacity market has, I think, multiplied jump by almost like 10 times, tenfold. The prices in that they increased in this market alone. That means that there is a it's fundamental drive for for this technology to be deployed. And projection, if you, as you can see on this chart, it's actually to grow several times in this market in global terms. And yeah, PGM and ERCOT, which I mentioned before, they're definitely driving this trend in US. Yeah, just one more thing before I move further, that no matter what has been happening in terms of policy change with the election cycle in US, that they still kept, they removed supporting mechanism for renewables, for solar and wind, but they kept, so it's called like, as you see, tax credits, tax credit deduction, compensation mechanism where the asset is they compensate you up to 30% of the capex, and for batteries they kept it until 2033 if I'm not mistaken. So they still realize that battery technology it's necessary for keeping the grid safe and stable, and instead of building out massive new power generation capacity on fossil based. Moving on towards the actual data centers, the subject of of this of my talk, uh, and briefly speaking about the old model, and to a degree, it's still a major model for most data center operators um, and developers. Traditional data centers are static loads. Why I'm saying that is that yes, a traditional data center which provide compute, they provide a quite like predictable base load. Depends obviously on the data centers which provide compute. Some of them provide storage. There are different designation, but in general, these are very even base load assets. Having said that, we see that there is the market trend. I put here the file which is like just for the projection for the next 10 years, and it projected to practically like triple in 10 years time by 2035. And it means like this is the annual investments into data center in terms of how much billions going into it, and basically it will be trillion industry in the years to come. At the same time, this is not reflecting what would be happening on the other side of the equation, what will happen with the grid itself, because you need all of this massive investment you need to plug somewhere, and you still need grid available to do that. And if you look into the articles, that sometimes right now it's taken, like in Texas, I think they are saying that they're not accepting anymore any new loads until 2030, late 30s, which we're talking about more than 10 years right now, since because they don't have enough grid capacity. And having said that, we're having only, if you look at data centers, if you have you talk to you work with them. I mean, we talk with operators. You see that they present not just a challenge for the grid and for energy industry itself, but they provide as well. They provide opportunity since most of them already have built out. They're consuming large loads, meaning that those of you who work in this, like on the energy sector, to deliver large load, you need a substation, you need a lot of infrastructure to be already built out. Uh, these guys have it already. Most of them, they have their own substations. They have large power lines coming towards them, and that means like infrastructure is there. At the same time, when I was doing my research, just saying, okay, if this industry is really interesting, that you don't have to apply for a new interconnection point. Meaning, like if you want to deploy a battery right now, industrial scale, if you like, you talk about large hyperscales in battery space. these guys as well, they face a challenge that they developing projects, the average time for them is about like 3 or 4 years to develop such a project because you need to plan for a large load, you need to connect um, to a high voltage power line, and well, you need to build a substation. It takes time. The development takes time. These are large energy assets. And while we started looking into that, we said, why don't centers don't do it themselves? Because it's just it's obvious. Many of them experimented with they call it in US demand response or having their assets operating in different programs which are provided by TSOs or utilities where you can participate, let's say in there's a ERS program like in Texas or in PJM or in other deregulated market. If your asset is deployed there, you can curtail during peak hours and maybe ramp up production during the let's say low consumption period of peak hours, and that's where the asset owner earns extra. It's not just you're going to be having a just obvious economic effect that okay you consume less during the high price then consume more during the low price, and not many data centers have this kind of flexibility because yes you can sometimes you reduce your load but you cannot really switch off because then there are opportunity costs. You need to do your own business, and some of the operators like let's say like big operators like Google, they need compute available. They need to have the data center running any like at any given time, and for them it's not really cost effective to curtail them. And while this is happening, uh, most of them, if not all, they have already UPS systems, uninterrupted uh, power supply units, which are effectively batteries, but they never operate them as a flexible assets. There are some of course they did pilots. There was a pilot in Scandinavia, there was a pilot in Ireland. There was then a large data center was dedicating some of the storage capacity which they have as a reserve, as a backup power to be deployed as for grid balancing. However, it's at least not until recently, it was not a mainstream. It was just more like a pilot project or test runs. While we see in like in the recent development, and I will come down to that, we see that the story is a little bit is changing. Why I'm saying that? First of all, if you want to have your asset connected, you need to throw something on the table towards the utility or towards the TSO if you're connected to a large like high voltage grid. And that means that they definitely, when you coming up with the new connection request, um, every TSO, every utility is always thinking about how they're going to compensate for any discrepancy which you're going to have on this consumer end. I just need to mention, maybe I mentioned before, but I think I need to mention that when we move towards AI, obviously AI will give so what is the consumption profile of AI data center? On one hand, it should provide you base load, but on the other hand, if let's say it's a medium-sized data center and how actually AI works, GPUs, it's graphic processing units, which are, let's say, backbone right now of AI data centers. They work on request. Effectively, if there is the model, the training, they load it sometimes with like to 100%. However, when they are operating during like a request like mode, then the power consumption can range from 0 to 100%, and that provides a lot of intermittency on the consumer end. So uh, uh, batteries become an essential part. How do you compensate this this such variability of the consumer? You need to have a fast responding passive energy asset, which is the battery is definitely best answer for that. So Meaning that we started experimenting and right now developing and right now and actually building the first units ourselves. We started looking since we started looking at the medium-sized, small to medium-sized data center operators, which are ranging between like 10 megawatt to 100 megawatt. These are our sweet spot, which we operate, and those who are actually pivoting towards or investing towards AI data centers, there is emerging model for compute marketplace where independent operators can offer to sell their compute capacity. Usually, it's been taken by large players, obviously, but the way where the AI industry is growing, where demand is going, is it's not just going to be hyperscalers who will dominate the market space. There will be room for a smaller, medium-sized players who have their capacity in place, who do not contribute just billions into that, but who can say invest 100 or 200 million and set up between let's say medium size, like 50 megawatt AI or GPU data center, and their efficiency becomes critical. Where you can deploy a battery co-located with the data centers, since I mentioned they have already infrastructure in place, and some of them already have extra capacity which they can consume. They cannot consume immediately. Let's say there is a 50 megawatt data center, but the total capacity which is available on this site for this substation is a bit more then let's say there is like six extra 10 or 20 megawatt or even same volume extra capacity. There you can deploy battery, not behind the meter, but co-located. Why I'm saying that this model can actually work, because when you collocate it on the next to a large consumer, you can still produce power to the grid during discharge period, and that means that co-located battery can actually operate as in a dual mode. It can still be a UPS. And UPS you need only in a case when there is a power cut to the site. If there is power is lost, that means like the whole setup. If the battery is physically located not too far away, you can still put a line into it and have a switch which will kick in if there is a power loss from the main grid, and that the deployed battery can still utilize the infrastructure which has in place, and at the same time operate work towards the consumer, but in different mode, not rather than just to be a balancing asset for the grid, but become the supplier of power, of necessary or backup power to the data center. And it's definitely a possible model. So we started working on the dual use batteries. Yeah, I'll be just in a couple of minutes and I'll be finishing this. Basically, these batteries operate as the uninterruptible power supply through a special switch. You can switch effectively instantly, and that even during the prolonged periods of power loss, most of data centers already, all of them, they have gensets in place, which kick in after the if the power is lost, and provide this capacity. My argument, or in that sense, is that for developers or for investors, what is the opportunity? We say if we look into US like primary market, PGM and ERCOT, there's definitely you would be facing like long-term like long queue if you want to deploy your flexible assets during as a standalone unit. Yes, there are obviously you can develop a project, you can find land, you can find the interconnection point, you negotiate with the utility, but it takes time. On the other hand, if you are operating close to existing infrastructure, that time can be shortened. If you team up with the data center developers, then it's even a mutual. We work with one of companies who is actually right now putting extra capacity. They operate right now 160 megawatt, and they add in on one side 300 megawatt, and on the other side they add in 1 gigawatt of capacity. And the condition under which the grid operator allowed them to do so was that they would provide flexibility. So that's where it's one of the unique moments when you can combine your development of, say, BESS project with the development of a data center, because you will provide flexibility as part of the whole larger development. And there you would have obviously value stacking in that part, because maybe coming back to the like where I started, that there is the most profitable markets where you would operate is definitely is frequency regulation. This is where the grid pays, I would say, one of the highest premium. There is obviously capacity market participation that in some markets are extremely attractive, and the demand response is based effectively it's like following the peaks and providing power when it's necessary, and in some cases consuming when there is overproduction of capacity. Um, uh, PGM and ERCOT, I would argue, one of the most interesting markets right now in the world for investors, especially in developers, because that's where they introduce and changing. Unfortunately, right now it's still shaping up the rules for flexible asset operators. But the market, you can just look it for yourself, just Google it or ask AI GPT, see that the revenues are actually attractive. So you can have like returns on in this market. Depends, of course, where you deploy it and which area. But on the best project, you would expect like double digits of IRR, which are extremely attractive right now. But we'll see that there might be at some point market saturation, but currently there is certainly a deficit in flexible capacity in most of these areas, especially when you can see it on the deregulated markets where this data is actually it's exposed. Regulated markets are slightly less visible because the operators they tend to curtail everything in terms of the data availability. At the same time, we work some of the operators who data center operators in like in central U.S. states where the markets are like regulated, like in South Carolina or like Arkansas. The regulators there they still ask them to actually they ask for flexibility, even that they don't have like programs which are available for private investors or private IPPs to go into, but indeed they are following this trend. Just to mention quickly about the financial regulator advantage, US is leading as a leading market. They still keep the incentives in place, so it's extremely favorable right now to invest into that market. It gives a bit of speed in terms of the approval of the project when you negotiate with utility. Depends on utility, but in general, this is definitely a rule. And there is definitely ESG premium because it definitely considered as if you deploy a battery, it's considered as a green technology because you can store power, you can like work with the renewables to procure renewable power generated rather than just work with the fossil fuel and generation. And just a few words about the technology, what we are working on is that my team is actually developing AMSs. A backbone of our technology is not just about development of the battery storage project or data center project. We work is how to unify it, how to distribute and control power automatically synchronized with the grid. So right now we have in our system meaning our system that we've been working on the data center management software for quite some time. And what we have developed is that yes, we've integrated with the let's say like major indicators like price, real data feed from the markets is available. We work in ERCOT, we work in PJM, and we work in some of the central states, other deregulated markets like the NYSO. And there we see that we can definitely optimize power consumption accordingly to the grid requirement. At the same time, we automate operation and how to distribute power between the different consumers or different uh, power generation units. This kind of sketch which I put here is a screenshot of one of our systems we developed for. It's a complex airport project where they have power generation from solar, from the grid, they need to manage the consumption. They have their own batteries, and this system has to be completely automated in terms of the consumption, power distribution, and how we can provide services to the grid to be flexible, and on the other hand, to provide major needs for the consumer. And eventually, the more flexible consumption, flexible assets will be added to the grid. Of course, reliability will be increased dramatically, and is definitely essential for grid operation. Just as the end, to finalize, I strongly believe that pairing batteries with the data centers, not just data centers, but with the large-scale consumers, that's a key, the key to unlock a lot of power in the grid. And that's, I think, the end of my little presentation. Thank you. Sorry if I took too long to speak
Perfect.
about it.
No, very, very interesting. And it's definitely data centers is on a lot of developers' agendas, and it's definitely, it's topic of the year, and probably next decade for sure. And it's definitely growing, and I really appreciate you sharing your knowledge and wisdom with us on this specific topic. We still have about 5 minutes to go through, few questions. Just to remind those who joined late, you guys can download Andrei's presentation in the chat section. There are a few other useful links where you can submit projects for us to review, become our referral partner. And yeah, so look, let's quickly go through the questions that we have. And also, yeah, of course, we will be sharing the recording with those who joined late or who missed part of the presentation or who couldn't make it. So first question or two questions in combination from Marcelo Ferreira. He's one of our clients and from Argentina. So it starts with actually a comment, basically where he agrees that the grid intelligence will manage flexibility and control. And the experience that with gas power generation plus solar and plus wind in 132 kV energy lines in Argentina, best system gives kind of strengthful and robustness to the grid. So the question is about the procedures for restarting from blackout. You mentioned
Mhm. Like
blackout.
start.
Yeah. So if you could cover that part, would be great.
Procedures for well, it's first of all there are protocols, of course, to how to restart and do this kind of like black start capability. That I would say these are when you like, develop a project or like a battery project, you would focus on the not just focus, but you have to develop black start capability, meaning like the battery can be a like grid forming asset at at some point, and that's I would say this is what it's another feature when you work with some like either remote assets or assets which you consumers which need to be either frequently or have facing like certain blackout. Like if there are regions which are, I'm sorry to say, but Ukraine and so is suffering from that recent, from because of the war effects, and they constantly facing the blackouts. Probably this is the markets where energy professionals they test what is actually what not they see what's actually what's possible is doable, They recently added 200 megawatt new BESS installation with Fluence, and it's distributed, and it's definitely helping out in terms of the that your effect. And when you do a black start, you need to make sure that your systems do not automatically will not shut it down because of the increase. Everybody starts consuming at the same time, so you need to have a grid forming capability during like initial stage to make sure then there is when the gen sets kick in, that you have the smooth operation. Well, I hope I can answer it, but see, I'm a bit vague in terms of that there are different markets and different conditions, and it's really hard to say. Okay, there's a universal rule for like for each location. It really depends on energy mix. It depends on what kind of other assets you have in the area, what consumers are. So I would, in general, say that indeed during the design stage, you would plan for this capability. And in some of our projects, we work with that, but probably it would require to look deeper into the actual project itself.
Oh, that makes sense. Perfect. So some recommendations to developers. There was another question about the what investors are interested in terms of minimum, maximum. You mentioned that nowadays standard is about 100 megawatt. There are some hyperscalers who build gigawatt factories. So in terms of attracting investments, your recommendation, what size data center or the power generation facility for data center should be?
I would focus on the thanks for the question, by the way. It's a good one. That I would focus for investors. Really, I would focus on the medium size, meaning like you don't have to develop like 100 megawatt battery, which is in some cases can be quite risky. You never know what will the dynamics of the market dynamics will be in this location in like 5 years or 10 years down the line. But if you start working in blocks, 5 to 10 megawatt, that gives you quite a bit of traction. You will see you can sense the waters effectively. Try how it's going to work, and this would can give you like a sweet spot of the operating. I'm talking about like in terms of the 5 to 10. It's not. It's just on the interconnection capacity. Maybe you would deploy like 2 or 4 hour duration battery, so it would give you like maybe between 20 to 50 megawatt hours in depending on the what kind of capacity you would choose. But
Because a lot of investors, they want to see also your PPAs or offtake agreements, basically something that you could secure with one of the hyperscalers,
yeah.
and to guarantee that the project they're investing in will have steady revenue stream.
Oh, that's by the way, that's we have looked into this. Is I would put it like this. First of all, if you deploy it with the next to a consumer, large scale consumer, you can guarantee your offtake through the. Let's say you can make an agreement on the redundancy or emergency power supply as a to act as a UPS. I would say like this is kind of it's on cherry on the cake, but major revenue would still be from the ancillary markets, and there you can speak to the even to the energy traders, because the ancillary markets operate more like a
Mhm.
kind of auction style, right? You make a bidding, how much capacity you're going to bid for, to be available during certain period of time. But what we see on the markets, let's say, like one of my first projects in this space was in Sweden, in Nordics, in Europe, and there we saw that the market dynamics was quite erratic a little bit. Initially, it was really jumped up to like the revenues were, I'd say, abnormal. You would make like you can recoup your batteries, I think, like in 2 years or even less. But then the market obviously stabilized during a certain period. But what I'm saying is that you would always have, first of all, a mix. You can always stack different revenue streams from battery. Battery will not just, you can do arbitrage, you can do frequency regulation, you can do much like peak shaving. So that's, um, you can stack different revenues, and I would say like for investors, you can always team up with the energy traders. I think it was like model for solar developers in Poland, that they had a feed-in tariff, but most of the developers were choosing to actually to enter a long-term agreement with the energy trader, which would give you slightly higher premium
Mhm.
and work on that in this model.
Perfect. Okay, we're running out of time, but let's cover one more question. It came from Lada. I'll try to shorten it. It's basically around the scarcity of space. Well, she says that in US, you covered US quite
Yeah.
well. That in US the space is not an issue, but in Europe, where population density is high and the space to allocate, data centers plus BESS plus PV or wind. So what would be the suggestion here for this for highly dense populated areas?
Well, first of all, the quick answer, it's number one. You can do a distributed setup, right? You can locate several blocks on the in the say I'm right now in Netherlands, and this is a very extremely densely populated country in Europe, and still I have quite a few friends who are developing the best here. Right now they're building quite a big one. But number two, I think important point, what is the alternative? Alternative, if you're not deploying BESS, you would have to deploy extra generation. And that would take, whatever you develop there, maybe wind, it's different, like on this thing, it will not take much of the footprint. But if you start deploying any, even gas genset, it will take probably more than the battery. And the battery is not it's not the largest. You don't need so much hectares of the area. You just need a 40-foot container for 1 megawatt, and that's it.
Or you remain dependent on data centers that are located in US, which is not ideal, right?
No, that's it's another topic. Probably we need to do another webinar on the on data center.
Politics, on all the politics.
Yeah, on the because on that end, it's actually that. Europe, for some reason, it's actually lagging behind with the AI data center development. It's more, I think, more about politics rather than the actual need. The need is there, definitely, and
Right.
we'll see the computer will be in high demand. But US right now, because I say, more deregulated than Europe, is definitely driving it forward. And the companies, if you see all the tech companies are there.
Look, yeah, very, very interesting. We still have some questions that remained unanswered. What we're gonna do, I'll ask my team to accumulate those questions and share them with you so you can provide brief answers. So we will share it along with the recording if you don't mind, because we don't want to
Absolutely.
keep people waiting. And I really appreciate your time again, and thank you to everyone who attended this webinar. So just to wrap it up, we also now, as I mentioned in the beginning of the call, we partner up with green bond issuing companies. So they are very much interested in data centers. So if you guys have access to good data centers in mature stage with guaranteed offtake, preferably from one of the large hyperscalers. Then the green bond initiative is quite attractive. You wouldn't have to give away too much equity, but we can talk about it once you guys identify such opportunities and share them with us. Or if you're a developer, please reach out. I shared links in my email and also a link and presentations in the chat. Please download it. We will be sharing the recording and Andrei's presentation again probably tomorrow with the rest of you and those who didn't attend. Thanks again, Andrei. Really appreciate it. Looking forward to catching
Thank
up
you.
with you soon when you're back in Dubai.
Thank you. Well done.
Cheers.
Thank
Cheers.
you.
Bye.
Bye bye.